Hi, everyone. Um, June 10th, this is important day and a week. I think the next week is even more important. Now, we all always look at two aspects. One is technical aspect, and second is the macroeconomic aspect. But today we have to touch base the third aspect, which is crypto fundamental, which is not so important until there is anything major. Like what is major? Like anything like FTX kind of an event, and the recent Binance related or Coinbase related, basically SEC's action. Those type of crypto fundamentals matter. Now, I'll share my point of view. Of course, everybody would express differently and think differently. I'll come back on TA, of course. And so when I look at the big picture, um, my assessment is it's not about something wrong with the crypto. First of all, it's about protecting dollar. This is my strong opinion based on understanding that why US would not approve uh, ETFs, why US would not clearly define guidelines or regulation for crypto. If the country allows gambling, why crypto is not allowed? Let's assume I'm not saying crypto is gambling. It's much more, we know, but let's assume that let's we consider it's gambling. But then if it is gambling, let's say, then the gambling is allowed anyways, right? Everywhere in the US. So there is no ground for which what SEC is doing totally doesn't make sense. So that's why people think that uh, I mean what they see is the SEC is going after crypto, but very few people understand that it's not about crypto, it's about protecting dollar. And a simple understanding that I developed is what happens is there are two factors which I mentioned earlier also, but in a different form. See, when the US first of all is more concerned because the other country doesn't have their currency as the the I would say world currency, so to speak, or trade currency, right? So it's not a big deal for other countries. It's a big deal for the US because it's the currency which is being used globally. It is used as a reserve. So each and every nation has to keep USD as reserve because for trade settlement, the USD is required. I'm not saying each and every trade, but majority of the trade. Euro and the USD actually comprises 85% of the global trade at this moment. Of course, the thing will change and it's changing rapidly, but there's a clear dominance from the USD, especially. So each and every country has to keep USD um, as a as a reserve because the settlement happens in USD in most of the cases, international transactions. Now, when that is changing, the landscape is changing, you would hear a lot of things about de-dollarization. I think that's related, right? And I see nothing different because it's always like if you go back in past, China, India were the top economy 400 years, 500 years ago. Then the Dutch ruled the world in a way, economy point of view. Then the British ruled it, and of course French and other colonies, and the US is leading, um, dominating in terms of trade and currency. And things change. It's the global power changes over time, over decades. Nothing happened overnight, but there is always a shift, a gradual shift happen every. So this is what I learned from Ray Dalio's book. Whatever I'm saying is mix of whatever I'm reading around the people who I admire. So what I do in this kind of session is I try to share what I extracted from knowledgeable people I believe. And So this is what I learned, and I attempt is I try to connect dots to understand what is the bigger game here, what is the big picture here. So this is the this is the context. Now in this one, when I think about crypto, what happens is, so compared to stocks, when you invest, when the US investor invest in the let's say stock like Apple or any US based company, the control remains with the US government in indirect way. The money remains with the US based company, what I mean. And that means the control is still within the range of US laws. But when I, as a US citizen, invest in crypto, the ball game changes. Why? Because let's say I invested in USDT, just to start with, let's say. When I say investments, I moved my or converted my USD to USDT. That means that my USD is locked. Remember, my USD is locked. That means that is as a collateral, it is locked. And that when it is locked, that means it's not available for circulation. So that liquidity is no more there in the real world, in the traditional business I'm talking about, because my USD is now converted into stable coin, which is crypto world, and that USD is not supposed to be moved, right? It is locked up. That means that USD is not in the economy. So that means lack of liquidity over there. And so if you can imagine, whether it's a USDT or any other crypto, basically, when I convert, that money goes out of the mainstream system. The USD doesn't get destroyed, but from transaction point of view, it is no longer available because it's there, staying there as a collateral. So if more and more USD is moved into crypto, now you would be wondering, moving into crypto, how it is different than stock. So that's why I started with the stock example. Because when you invest in stock, again, you are investing in a company, indirectly you are investing in the US business. When you as a US citizen invest in crypto, not necessarily that crypto belongs to US entity. It could be some other nation. In other words, you end up investing in other country. In other words, your USD is being drained out of the system. And it would be worse even if the country is adversary. Imagine, I'm not saying, let's say take an example of coin waves. Again, this is just for example. We don't know the facts, but let's say if any coin like waves is totally Russian, and we don't know if the Russian government has involvement or stake in it, and we don't know. Similarly, some other country which do not have a good relationship with the US. Imagine more and more money go into that kind of those coins or projects or entity. What happens? That's a loss. That's loss for the US. That's losing control. So this is the basic understanding I developed. And essentially, this is the core issue I see. So SEC is just a tool to control or kill this industry in a way. Now, so situation is definitely serious. There's no doubt about it, especially for those who are in the US. And because mostly the money comes from the US, it is affecting globally. So there are two aspects. One, what is there for the US citizen or residents, and what is there for rest of the world. Now, there is no easy answer, of course, but what I understood and what I interpreted is, uh, if SEC goes after big exchanges like Coinbase and Binance US, which were approved by them only because those are regulated in a way, because anything that opened in US was like regulated. So somehow, either it is possible that some of the activities exchanges are doing were not approved. It is possible. But if Binance US was allowed, then it doesn't make sense to go after that exchange at this point in time. It doesn't make sense to go after Coinbase like public company at this stage, when they have been doing business. And forget about business, it's a public company, so they have stocks and people are invested in, and there is direct impact on it. So how can they let all this happening? So as I said, it is possible that there are some activities, but again, they don't have clarity that they are not pointing out what all things they are supposed to stop, and instead of stopping the overall service. So the SEC is after overall service rather than pointing out some of the services. Now, as far as coins are concerned, I expressed my point of view that if they go after coins like established coin like Matic, Cardano, and then Sol coin, and so if they go after this kind of major coins, then no other coin can be left out. Basically, they all the coins come into the same purview, because same rule set, because all these are proof of stake coins. Again, I'm surprised that why Filecoin was part of it, because it's not pure proof of stake but proof of work. As far as I am aware, there can be some element of staking, but it's a nature. But in general, I always believe that even if SEC go after different coins, they cannot go after proof of work coins. Proof of work coins are always safe because the production of those coins are not in hands of team. Proof of stake is like proof of stake coins are no different than the fiat money which is getting created out of thin air. Proof of stake, 1 billion, whatever millions and billions of coin they're minting, they have no ground for it. Right? They are not burning electricity or some kind of asset. When proof of work, they burn electricity, means they are spending money. They earn because they spend money for doing it. So it makes sense. And it is algorithmic based. It is predictable in terms of how much to produce. And not like Binance, who would think, oh, we burned this much, and many other projects that we burned this many BNB, and now supply. So how much to burn, what to burn, when to burn is being decided by projects, which is ridiculous in my point of view. You cannot burn it. You have to have, the tokenomics should have clear guideline. And so I always believe that proof of work, they cannot touch it. So that's why Filecoin is something I haven't investigated why. Probably I need some more time to understand, because of the reason I mentioned. I think proof of stake makes sense that those securities are created out of nowhere. So I always thought, and that's why I always believe that no one should be holding this security coins blindly. Means everybody should know what is the point of exit, or what is the tolerance level. Of course, that's where the TA comes in play, to understand what level the trend will break, and so on, and one can plan accordingly. But keeping the TA aside, fundamentally speaking, I never believe that all these coins will go through, even though they are good in terms of project, because I have very different. So first of all, I go against SEC on what they're doing. And I shared my point of view why they're doing. They're weaponizing their capabilities, I believe. to curb the crypto, and I express my point of view why they are doing so. But at the same time, I believe that they are bad actors, they are cheaters, frauds, who have taken so much of money, millions of money, and they are not thinking, they are roaming free. Uh, and they are basically, it doesn't justify that either. So we have bad guys on both the sides, right? Now, and I have one opinion which is very different, which is related but very different, which is like, I don't believe that all the projects required token which need to be traded. I believe that the tokens are needed, but why they are being traded is something hard to believe. Now, why I'm saying it, so for example, if I have a service, I say, okay, the price of the opportunity channel is, let's say, $90. Tomorrow, after a month, let's say, if I feel that my platform has more demand and I have opportunity to earn more, and let's say if I'm providing more value and I see that I can raise price, in terms of USD, and people will still come to my platform and take my service. So I have that power. So the entity is creating coins. I believe the price, they can determine the price of the services and product by raising price or reducing price, whatever they want to do based on the market condition. I don't think they're required to be traded. And if they want that, in my opinion, it should be in form of stocks. So these are the two arguments. If they want people to invest, and if they want that to be traded and decide, the market should decide the price, not the company, then I believe these tokens should be listed as stocks. I firmly believe, because if I'm investing in so and so project and holding so many coins, I must have stake in that company. I must have ownership in that company. So I believe that all these coins need to be digital securities, regulated securities, just like stocks. This is my firm opinion, because what EOS has done, raised billions of dollars. No, it's a total fraud. Did nothing, didn't return money. And it's a disclaimer from each and every. One can lose everything, which is unacceptable. Yeah, one can lose value if the asset is traded on the downside. Then it happens in the stock as well. And even the publicly listed company go bankrupt. It happened with banks, and it happened always with some companies because of the risk related to their business. So it's not that people won't lose the money in crypto. If the company goes bankrupt in crypto, even the coin could go to zero, which is totally fine, because market will decide that because company has no value now, the value of the coin must be zero, which is totally fine. What is not fine is you give money and there is no promise. You give money and they don't return back if they cannot deliver. That's unfair. And that's why regulation is needed to catch those guys. So now SEC is making excuse, because what FTX did, what Luna team did, and so many similar firms have done it. So they got an excuse. Of course, that excuse doesn't justify. So they are making their cases to justify that everybody's fraud, which is not the case. So they cannot paint with a wide brush like that. I don't believe in that. So that's my point of view. So I thought maybe I'll share my point of view. Now we'll come to the price action. I believe that this kind this movement from SEC has to be taken seriously, but I don't think this is likely to be the permanent solution, because if the Gary goes away, then if he's replaced by someone else, this could change totally. because this is not about SEC. It's always about the person in charge of that firm. I believe so. Of course, there are other factors, but it's usually the case. Like CEO decides and the company moves in that direction. So definitely the basically the leader makes huge difference. So if Gary goes away, which is a possibility, because crypto community is no longer a small community. So I don't assume that the crypto community will be defeated with this kind of illegal action. To me, this is kind of illegal action from SEC. So expression point of view, I mean legality, because there is no law, so there is nobody is broken, so neither we have broken or they have broken. So in a way it's like when there is no clarity, but it doesn't justify. That's what I mean. Now so I don't think this innovation will stop. I don't think whatever coins they have attacked, they'll go out of business. Of course, not everybody can survive, but I'm sure they can get fund, because this is the US, not necessarily now the US only have power. There are other countries. Recently, Hong Kong approved the same set of coins. The money is there. So this kind of hiccup, I call hiccup because I don't think this is a disease. So in this kind of situation, who is going to lose? The US and the citizen. So it's, in my point of view, both from innovation point of view and also from economic advantages point of view. First of all, they didn't approve the futures for these exchanges. It doesn't make sense. You allow futures, BTC futures market, and you don't allow ETF. It doesn't make sense. So what they're doing doesn't make sense from any point of view, because why they're allowing CME? Because to me, CME is more riskier than any spot market, the futures market. So why they're allowing that? So why that is 100% regulated? So does it mean that it's all about BTC versus, like, I don't think so. I think they are BTC probably is untouchable for the simple reason because there is no governing entity. By any law, they cannot say that this particular coin is controlled by so and so. So in general, I'm not saying BTC, but what I'm trying to say, any proof of work where the company is not minting by their own, but governed by algorithm, then only. So I think that has been the stand that I mean that has been the stand I've been taking for very long, from a long-term point of view, from when you have to compare which one is relatively more protected. Right. So these are a few points that I thought maybe I'll share based on what is happening. Now, when it comes to trade, when it comes to investment, I think we have to think differently, because what we cannot figure out from all these fundamental factors is what happens to the trend, what happens to the price action. That's where the TA comes in play, and that's our main, I would say, focus. At least my focus, and that's what I try to share with everyone. When we see price going down by 15%, 20%, it is based on news, and price could recover. But doing nothing, assuming that price will recover, is also a mistake in my point of view. Everybody needs to know how much I can tolerate. As I often say that if you are not a good swimmer, maybe the water level up to the waist level is too much for you. If you are expert swimmer, then probably it doesn't bother, even the water level is at your throat level. So the water level means risk level, and the definition of threat is very subjective to individual. So in trading, if somebody has not put a lot of money, his or her risk would be different than person who has put huge amount of money. Simple. So we cannot say that today this coin has gone down by this much, that means it's a threat, because the threat level is very subject to the individual situation. However, threat level is not to be assessed from individual, but threat level has to be assessed from a trend point of view. And that's where technical analysis comes in play. Now, interestingly speaking, you must know that, I mean, you would have experienced that even in the technical analysis, if you ask 10 people, 10 people could give you 10 different opinions. And not only that, even indicators. When you use indicators, if you have multiple indicators, a few indicators would be talking, indicating that it's not a threat, but some indicators would be already indicating threat for whatever time interval you are looking at. Okay, so even in technical analysis, there is subjectivity, and that's where it comes down to an individual, not just tool, but individual, that what he or she believes in, or how her or his assessment is. Because then that analyst has big job to be done in a way, because there are market events and there are conflicting, let's say, point of view from the tools and the indicators and his or her personal analysis. And then TA has to extract out and then come up with a net effect. And that is going to be my attempt today in the current situation. Right. And of course, that will be my opinion and my perspective. And but as I said, the risk is always individually determined. It's never universal, right? But I'm going to focus on the trend for 15 different coins and Bitcoin, right? And probably off the record, I mean, this session is recorded, but I'll take some more questions. So if you have, we can analyze other coins as well. We can do that as well today, right? Because not necessarily you would be with this 15 coins, so we can go through other coins as well. Okay. So let's now deep dive into technical analysis. I'll start with 4 hours. So I didn't raise or change any support level, even though it is supported here. Because for me, this was the support zone, and the next one is this. And let's say, let me go on one day. This support was broken. The way I interpret is this support was broken on news. It happens sometimes. And you would notice that in a panic situation, so there are two types of trading, if I have to segregate. One is the trading based on the plan, right? And another is trading based on some external trigger, risk trigger especially. So something like this we can easily relate with our daily routine. We know that what we do on weekdays, weekends, and some plans, we always have some plans. Assume that the algorithms are also like that. People have investment plans. They have given the instruction to algorithm that this to ramp up by this much, right? And then everything, the net effect will result into the price action. What we do on our daily lives, same thing happens, but only difference is here it converges. Everybody's plan converges, right? Where in a daily life, your plan remains with you. What time to wake up, what time to sleep, what time to eat, what time to go to job, and so on, which is very individual in nature. But the plan is similar. So that's one type of thing. But there are always exception scenarios where, so if the weather is bad, you have planned to go somewhere, but you stop, or you end up doing something which is totally out of the book or out of the plan, something irrational in a panic situation. If there is fire, you end up doing something which you never have imagined. So similarly, in this situation, the price action of this is something that was not in the book or plan or algorithm, but something which is triggered due to external factor, external risk. And in that case, what happens is the selling would have happened, but when the selling happens together, then the aggregated effect is so much that it breaks support. That's what happened here. And then what we saw is a quick bounce when, because when the panic is like a spike, like anger, right? Sometimes the anger is always short term. So this is usually, so this is like panic selling, and then it breached the support. But then next day, everybody got more information. They understood what is happening and recovered. And then some correction, it was consolidating, in fact, doing fine. And again, there is some news, let's say Robinhood decide to delist. Oh, then Binance US, they given a deadline that by mid-June or somewhere, they have to withdraw money. Of course, when they withdraw money, there is going to be sell-off. Not only that, there is a chain effect. When the Robinhood does this, Binance does this, US, of course, there is a chain effect. And then people would try to withdraw from Coinbase, even though there is nothing wrong with the Coinbase currently, because it's a human behavior. So when you see that this kind of bad news continues, then again, what we saw today happens. So this is totally a psychological effect in my point of view, not a fundamental effect of crypto. Totally. Fundamentally, there's nothing wrong. So nothing changed. Now, when you consider SEC's action is fundamental, one point of view, yes. But to me, crypto fundamental is when a company does bad or good, that is fundamental. But this is like external threat. One may say, I mean, broadly speaking, it's fundamental, but not because something has gone wrong with a coin or project or team. That's what I mean. So this price action now has a direct relationship with what SEC does and the repercussion of that, in my point of view. Now, to your point of view, to me, I could have brought down this support to this one. So this was a regular support. And you may say this low was support in panic, which is a little extended one from a Bitcoin point of view. Okay. Now, this move to me is just a retest. Technically, it hasn't broken yet. The low hasn't been broken yet, and the day hasn't. But the day is not over, so we cannot say it hasn't broken. But at this moment, we are tracking 1 day. So it hasn't broken. So as I speak now, to me, this is our latest support, because that is a panic selling, and so this support gets extended. Because the temporary dump, right? So this is a retest of the support. So I can add one line just for reference point. Now, I don't want to change a lot, that this is our reference point. So price wise, it's broken. But as I explained that why sometimes it happens, and we can take exception because the market is also taking that as an exception, not as a routine work or routine behavior. So this is not a routine behavior. This is an exceptional scenario. So that's why we can take okay, this is where it got support. Now, when we zoom out, which we are going to do in weekly, okay, but let's complete on daily. So to me, this is not broken on 1 day. Of course, this is about BTC. Similarly, we have support level for other coins. So the comparison should be the same. We focus on BTC more because ultimately it gives that confidence. Now, this situation is a little different where the attack is on specific coin, not on crypto as a whole. So this is also to be understood briefly. So one can argue that, okay, BTC is holding up, but Matic like coin is down by 22% because it is being attacked, right? Directly. Some of the coins are attacked directly. So they are more vulnerable in terms of price action for sure. So we'll look into their technical individually. So usually we don't need to be honest, because they are so much tightly coupled with BTC. But this case is different because the attack is on specific coins. That's why. And of course, when the withdrawal happens and when the entire service is turned off, let's say Binance US, and uh, then obviously people think, let me pull out my Bitcoin, let me pull out my Ethereum, and so on. So they also go down for sure. I mean, usual risk management or risk trigger would end up doing this kind of. But you can clearly see the price action point of view, the Bitcoin drop in terms of percentage and other. We can compare and see how different, how big the difference is. Usually we see like twice or thrice, but this is way beyond that. And we know why, right? So we'll look into those coins individually with more focus for sure. Otherwise, they are not so important to me because if the Bitcoin improves, they also go along. They are just followers. So, but this drop is not because of Bitcoin algo. This drop is because of attack on those coins or overall crypto industry. So we have to have a little different perspective this time. Right. So coming back to TA stuff, one day from Bitcoin point of view, to me, this is not an issue, not a threat, because we have seen this. So this is not new at this moment, right? Um, that's where I would stop on one day and move into weekly to see what weekly is doing. Now, weekly, we have different perspective. We have this green box, and we have been tracking this boundary for the last few weeks, as we know. Now, I've been saying that this as long as this price is within this bound. Now here, the price is not important, the range is important. Because when you look at weekly, the price could move a lot within a week. So that's why as you go up higher in time frame, the range of price matters, not a specific narrow band of price. There's always a net band, but here the band has to be wider because it is not about specific zone. It is about a trend. The focus is a trend. Whether the trend, which is also subjective, which I explained so many times, but those who are not, briefly speaking, trend is very subjective to time frame and what we are seeing on our screen. If I see only this much, what I see is this is the trend. When I zoom out like this, then I see this one and this one. So we can say there is a downtrend and there is a recovery trend within that. And you know that what level is required. I said that we are not through yet, which has been a statement. But at the same time, I said we are not thinking about lower low or new low because it's in the green box, and it is still in the green box. But as far as the wave is concerned, the trend is concerned, we have to be very subjective and very precise in terms of quoting, because when I zoom out even further like this, then this drop is always with respect to this wave. In fact, not this wave, but the wave that began from 3K. Remember, this is again a digression. Like this was a digression we had. So this was a digression because of COVID. So I used to put a box here. So this particular movement can be ignored. So when I zoom out, the way I see as a TA is first leg up, a leg down, reality deeper, fine, but otherwise this would have been only this much, and then another leg up. So we have two legs in this bull trend, which started from this 3K zone. Okay. So many think that bull market started here. In my definition, bull market started here. This was because of the COVID. Similarly, this particular drop was because of FTX. Otherwise, this recovery would have started much earlier. So we have always something that could deviate the path or deviate, but we cannot ignore it. It's part of the history, so we cannot avoid or ignore it. But it's always good to clarify that. So when I look at this trend, so from 3K, it reached to 65K, let's say. And then it retraced this much, which is not deep enough in my point of view compared to 3K, right? Not deep enough. Yeah, this would have been deep enough, 10K, below 10K. Even 10K is not deep enough in my definition. Even if it would have gone down up to 12K, 10K, this particular correction would not have trouble the overall momentum, because I'm talking about overall trend. As I said, the trend is very subjective. I'm zooming out purposefully. This is uptrend, a correction, uptrend, correction. This is how it has been moving. Uptrend, correction, and so on. So BTC has been moving up since inception. Okay, so we can, of course, these are correction which are bear side, and then this kind of a correction creates cycles, right? But in a true sense, it's still in uptrend, because all these corrections were never reached to the prior low. In fact, the first time this correction reached to the prior high, forget about the prior low. So when you look at the history, all this correction were far away from the lows. This low is far away from this one. Even this low was far away from the high. The very first time when it corrected, the very first time in the history of Bitcoin, it came close to the high. Right? Anyway, so the point is, when you look at the price action, the waves can be dissected in different ways. Now, so there is subjectivity on what we talk about. Our focus is this particular trend, which I call recovery trend, because this is a recovery with respect to this down trend, right? And when you look at and focus without drawings, only Bitcoin, and then it tells you that this has touched the prior high. So what? The problem is when it goes deeper. So there are two things. It doesn't mean that one do not take any action. As I said, how much to tolerate is very individual, and because entry point could be different and the investment amount could be different, right? And for somebody 20% loss is big deal, for somebody 30% loss is big deal, and so on. So it's very, very subjective and individual. From a trend point of view, this particular trend point of view, there are two segments basically, or we can say four segments. One is clear uptrend within the uptrend. So this is, if we call this as uptrend, let's say low. Then if we dissect further, what we get is this uptrend, then consolidation phase, uptrend, and this consolidation phase, which is now a new low with respect to this one on a weekly. But we know that this low is not today's low. Okay, for now. Now, So my analysis point of view, I would say 25K, where the green box comes, is nothing. Means it's green. It's not even red. Entering into this one, which is orange, even up to mid-level, 22K level, this is where I would say it turns neutral. Remember, neutral. This is totally strong up to this one. This is middle zone, especially up to 22K level, it is neutral. And this is like water level. Again, this is my perspective from a TA point of view. Only if it breaks 22K, then it's a big deal. But in that case, there in between, there could be many more things could happen. So firstly, it hasn't broken 25K. And secondly, it is not even close to 22K. So as far as BTC trend is concerned, forget that it's in trouble from a TA point of view and from my point of view. Just forget about it. Okay. When I say forget about it, of course, you can believe what you want to believe, but it's just a message from my end that I don't care what is happening around us. And as far as trend is concerned, it's not broken. It's healthy. Okay. Having said that, this height is not good enough with respect to this one. So it has to do more and close above 33K, which I mentioned earlier. And there is one more level, which is a minor level. Once it is crossed, then we talk about 100K. So 100K is just a number. What I mean is new all-time high. So our focus is, I think there are two focus areas from my point of view. One focus area is there any probability of lower low, means this recovery that we saw from 15K up to this, is it in trouble? The answer is no, for the reason I mentioned. Then the next question comes, that means it's progressing. And I call recovery bounce. This particular phase trend, I call recovery bounce. So the recovery is solid, still solid. But it requires more. It has to close above 33K, and there's one more level, which I'll mention later on. Once that is crossed, let me remove this to avoid confusion, otherwise we'd think this is the level. So once that is crossed, then we talk about all-time high. We are not talking all-time high. I never mentioned all-time high in last many months. The same time, I called out bottom, and I said, I've been saying that the recovery trend has been solid, and it is solid, but I never mentioned about all-time high. And it is not that I am keeping the option open. It is simply probabilistically, I go by levels as same thing. The water level up to chest may be a threat, but you cannot declare yourself as drowned, right? And water level up to, let's say, knee level is not, we cannot say that you are totally out of the risk and you are basically free. I mean, totally out of risk, yeah. So that's the situation where we are in. We are not drowning, okay? The water is receding with the rise of this one. So you can say water level was up to the throat level. Now the water level is up to the chest level, right? So the water is receding, or I would say the water level is at the waist level, not even chest level, waist level. And here the water level would be at the chest level, something like that. Why I'm saying, because sometimes, it's easy to visualize when I give real world example. But, when I say the water is up to the waist level, for some waist level is a big deal. So I cannot comment on that, right? to me, the waist level, we cannot say you're drowning. So that's how it is. So it's this is how everybody defines what is called warning, what is called risk, and what is called, threat in a real, when the risk is realized. So I mean, then it is called impact. But at this moment, what we cannot say it's drowning. The water is because the water is receding. You cannot just see this one. You have to see from this one, right? So the water is receding. Yeah, water level has gone up. Analogy example point of view, but not something, not something like this below 22K. So again, we are not back to square one like this one, where we are almost drowning and talking about 12K, 10K kind of a level. Okay. So this is just to explain how and express how I feel from a Bitcoin point of view. Now today, we'll definitely look at DXY, but until last year it was relevant, but now the crypto fundamental is more relevant. Of course, that doesn't mean DXY is not relevant. I didn't mean that. What I mean is right now the current factors are, crypto factors are overpowering, they're overriding, and they are always short term until the we get clarity. So that's what I believe. So at this, whatever is happening, again, I don't think it has uprooted anything. Of course, it has uprooted Binance US and some business for sure, but not from a trend point of view. At least not BTC. Okay, and we'll look into other shortly. Now, let's look at DXY. So DXY is actually going down. Last week, it dipped and we want more, of course, we want more. We want it to approach this level, 101, 102. And so it's a wait and watch. Again, the FOMC meeting coming next week. So we'll see what Mr. Powell come up with, right? So that is also going to decide what DXY could do, and so on. So if they relax, so that factor is always the most important factor, the macroeconomic factor. So if Powell pauses or give at least hint of a pause, then I think I would say equity market will improve, and then at least from liquidity point of view, there will be better liquidity, because right now there are two sides, two sides of attack, like liquidity crunch and also liquidity crunch within crypto because of all these reasons. So if the Fed slows down, or I mean slows down means at least give a hint of pause, there is likely to be 25 basis point hike, one and last time probably. That's what analysts are talking about. And if that is the case, then it will improve the macroeconomic, I would say, factors, not from inflation, but it would take time probably. But at least there will be more investment coming in, because the cash is there. Cash is in the system, but the cash is parked into I mean, the money is parked into cash positions or money market, or some of the short-term debt instruments. So that the money is there. So that money will come into the stock market is already getting, that, right? Stock market has been racing up. And when I see retrospectively, this is what we are hearing for last few days, but it is possible that maybe the Binance thing is I mean, again, whatever I'm going to say is my hunch. I have no information, disclaimer. I have no hunch, but I was baffled. I was not getting why stock market is going up. I know that it's not one-to-one comparison, every day's comparison, but over 4 to 5 weeks, in fact, seven weeks, there was decoupling. I can understand decoupling for a few days, but 7 weeks, especially the pace that I saw in stock market, especially in tech sector, to be precise, I was not getting why crypto is not moving up. And my hunch is it is maybe because this thing was already under development and the Binance team were already kind of new, because you know that the Gary has not signed up something overnight. Hey, let me go after Coinbase or Binance overnight and go after them overnight. This must be at least few weeks old stuff, which came to surface a few days ago. In fact, 3-4 days ago, right? So I believe that it is possible that the Binance team probably knew, and probably their machines stop rolling because they are the drivers. We know that if the Binance stops or pauses, then everything pauses, so to speak, because they have the liquidity and kind of monopoly in a way. So it is possible that something was cooking up, and why we didn't see price action in crypto, positive price action in crypto, when the tech stocks were like pumping hard. I mean, retrospectively, it makes sense now because nothing happens overnight, I believe. Anyways, as I said, this is I'm just connecting dots, just a logical conclusion without any real information. But I could not see any other reasons why crypto didn't participate in that rally. Okay, so from the XY, it is melting, which is good news, but it has to go down further because this is again not deep enough. I would love to see below 102. Then I think it would be amazing. Let's look at 10-year debt. So this is still the same, nothing major. It's a more, this is neutral, I would say, neutral at this moment. And I think this will also move based on what Fed decides next week. So I would say I would conclude here from a Bitcoin point of view, Bitcoin and other associated data that we typically look at. So I hope you find this useful. We'll always discuss this in detail once this session is over. Okay, so I'll conclude here, but feel free to ask me more.